Whether you are an investor, a day trader, a swing trader, there are many ways to analyze the trades that you intend to make. But there is one type of analysis that is more important than any other. And this week, I'm going to share that with you. Then we'll take a walk through the markets. We've had a pretty good gain this past week. What does that mean going forward? Where are stocks, commodities, crypto likely to head? I'll discuss that and the day trade of the week on NEGG. Hi, and welcome to this week's Stockscores Market Minutes. Well, there are many ways to analyze the market. The two common things that people do, whether they are an investor or a short-term trader, is either technical analysis or fundamental analysis. Now, technical analysis looks at charts. This is what I tend to use. You'll see me do this every week. There are patterns in these charts. We look for abnormal activity in the chart. Those things are very important to picking winners. For the longer term investor, I think that fundamentals become quite important. What are the company's earnings? What is their earnings to growth? The price earnings ratio? What is management doing? What's the state of the overall economy? Those things are all important for the long-term direction of the stock. But those are not the most critical things to determine your success in the market. Believe it or not, there is one other type of analysis that is even more important, and that is the analysis of yourself. You see, human beings are predisposed to fail in the stock market. We have an emotional attachment to money, and that causes us to react unfavorably to fear and to greed. In some ways, we have the fear of missing out, which means we buy marginal opportunities hoping that they will work. We have a fear of taking a loss, and so when the stock tells us to take the loss, when the market tells us that we are wrong, we often don't sell, and then our small loss turns into a much bigger loss. We tend to take way too much risk. We listen to the words of other people instead of trusting what they are actually doing with their money. There are so many traps that we fall into because we are normal human beings. And if you want to succeed in the market, you have to analyze yourself. You have to look at the mistakes that you make, the losses that you incur in the market, and try to figure out what is it about you that caused that to happen. Almost always it relates to your emotional attachment to money, and ultimately it's because you are a normal human being. Of course, we all want to be normal human beings, but to beat the market, you have to be a little different than most people. You have to add to your winners instead of selling them too early. You have to take the losses when the market tells you to take the loss. You have to manage risk effectively, and so many other things. Avoid bias when you are looking at opportunities. It is very easy to believe in something because you have a bias from some other area of life. So, if you want to succeed in the market, yes, work on your technical analysis, your chart reading skills, study the fundamentals for those longer term investments. But most importantly, if you want to beat the market, make sure you learn to beat yourself. All right, let's get into this week's market analysis. And we had some good gains last week. So I'm going to jump into the Stockscores website now. And the first chart that we're going to look at is the weekly chart of the S&P 500. Now you'll recall last week, it felt like maybe the buyers were starting to get interested again. Maybe the buyers were interested in taking back control of the market. And we had a good gain last week, and it now has us really flirting with that downward trend line. Now, it's not enough that we're flirting with the downward trend line, but it's also important that we're doing so from a rising bottom. This is a classic reversal pattern. Now, we still need to really make a strong break of the downward trend line. And typically, when you rise up to it, you'll stall a little bit. So I wouldn't be upset if the market stalled next week and then ultimately breaks through. But we are getting to the point where the buyers are just on the cusp of taking back control of the market that was in the seller's control for all of 2022. You can also see that the sentiment stock score for the market is 58, and the critical point for that indicator is 60. So when we get to 60 and above, that means the buyers are taking back control. Look at the long-term chart of the S&P. For most of 2022, it was below 60. We had that brief period during the summer rally when we made decent gains in July and August that the market actually got above that score. But until really now, we're only now starting to flirt with it again from the right kind of chart pattern where we're building that rising bottom and threatening to break. Now let's take a look at the short-term chart. Take a look at the hourly chart here, and you can see that the tax loss selling into the end of the year, and then the market stabilized and started to move up, and that's what the story has been this past week. So I'm feeling better about the market, but I would like to see us maybe pause a little bit and then break to the upside. What could happen, since we are at that resistance level, is we could roll over and go back and retest these lows. And so this sort of 392 zone on the S&P ETF SPY is a critical sort of floor. If we start to break down through that from a falling top, then I want you to be cautious again. All right, let's take a look at the small cap market in the US. IWM is the symbol I like to use for that. And we're going to go with the 1 year daily chart. And here you see that the downward trend line on the small caps has actually been broken. I don't love the fact that it didn't stall at resistance before it broke. And so I still think there's a decent chance we pull back. But you have the rising bottom, you're breaking the downward trend line, and so things are looking better there. And I talked last week about how the small caps are looking better than the large caps, and in particular, some of the biotech sector, some of the semiconductor, some of that tech stuff that really got beat up through 2022 is stabilizing, and we're seeing good opportunities again. Last week was a much better trading week than we've seen for many months, and that's because the buyers are starting to take control. And it happens so often. Traders get frustrated with the market, they give up, they leave the market alone, and then they miss the turn. And then they only come back after the market's been going up for months. So you really have to take a look at the market now. It's not for certain yet that we've bottomed, but we're certainly making some signals that we might be doing that now. All right, let's take a look at the Canadian market. T.XIU is the symbol there, and had some decent gains on the Canadian market as well, bumping into resistance. So this chart was a little healthier because it broke the downward trend line some time ago. We've built the rising bottom. We're coming into horizontal resistance. I think we'll stall, pull back a little bit, but ultimately if we can do that, then we're looking better. Notice our sentiment stock score is 68 on the Canadian market, and that is because we broke that downward trend line some time ago. We've built the rising bottom, and now we're threatening to break resistance. All right, well, the Canadian market is heavily focused on commodities, so let's take a look at gold. It has been one of the hot sectors. We've talked about this for the last number of weeks, how the gold sector is making a good recovery. It broke its downward trend line a few months ago, then it broke up from a rising bottom about 2 months ago, and it continues to move higher. It is now getting to the point where buying now gets to be a bit of a chase. Now, that's different if you're a day trader or swing trader and you're trading for short-term moves. But if you're a position trader, I think the bus for the most part has left the station. We are seeing gold go up, starting to go parabolic and coming into resistance. I see no reason to sell. I'm just not so eager to buy for a longer term trade. Now, day trader, there's opportunities in some of these stocks through the week. And I know that just last week on Friday, there was some opportunity in some of those gold mining stocks. All right. Now, how about oil? USO, or well, let's use BNO this week. And let's take a look at the 3-year weekly chart. And we're at the upward trend line. So it's kind of the opposite of the market chart, where the market chart is threatening to break its downward trend line. The oil chart has fallen down to the upward trend line, where it should bounce. However, until we make the bounce, and we did make a little bit of a bounce next week, or last week rather, I'd like to see it break this little pullback here. And so if it can do that, then it's better. But I want you to be real cautious, because we could just as easily break down through the upward trend line, and then I expect more weakness in oil. Notice the sentiment stock score is 38. It's not as bad as it is because we are at that support, which we've seen the market bounce off of a number of times. The difference here is that the oil market went from being linear to parabolic and then collapsed. And not really collapsed, but pulled back for a number of months. And I think we may just now go sideways for a while. Hopefully we're going to hold that trend line of support. Well, critical to the price of commodities is the US dollar. And one of the reasons gold has done so well is you can see the US dollar has fallen sharply. So that's a fairly bearish chart. But let's take a look at the long-term 3-year weekly chart. And if I draw the trend line like that, what do you see? We've fallen into the trend line. And it's likely that the US dollar will make a little bounce back next week. No sign of it happening yet. There's been no strength in the US dollar. But typically, when pullbacks fall into an upward trend line, like we see on the US dollar, you usually get a bounce off of that. So watch for that next week. What would motivate that? Interest rates. If we pull up the chart of TBT, which is the inverse of the Treasury bond market, you can see that they fell last week, and that contributed to weakness in the US dollar. But it's also nearing a floor. And again, when you fall into support, you usually bounce off of support. And so we'll see if that happens. We are still in this sort of short-term downward trend in interest rates, but in the longer-term time frame, we are just starting to threaten the upward trend line. And we do so from a falling top. So if you've been concerned about interest rates, inflation, that sort of thing, well, it seems like the raise in interest rates is doing a good job of slowing the economy. Maybe the Fed is going to ease up on its rate increases, and you'll see then this start to stabilize. It's already priced in an easing up of the Fed's policy. And I think now we're going to see it maybe continue further, or at least just go sideways here for a little while. Stability in interest rates will stabilize the stock market, and that to me is the most important thing. And we're seeing that start to happen already in this past week. All right, final chart I want to take a look at is GBTC, which is representative of Bitcoin. And if you go back to this 3-year chart, many of you will remember that I've been fairly bearish on Bitcoin for a while. And I recall when it broke down through this support zone back here in, I guess it was May of last year, I said it's probably, this ETF's probably headed to $10. And it did exactly that. It actually got down to about 7. And this week it's bouncing. And that's what you would expect, because this is old support. And that old support, you draw it across, and we're kind of in that range again. So I think Bitcoin is probably stabilizing in the short term. There's no real great reason to buy it for the long term yet. We're still in the downward trend. We haven't broken it. We haven't built any rising bottoms. But for a day trader or a swing trader, many of you will know that this past week, there was great opportunity, particularly in the Bitcoin miners, like HUT, RIOT, MARA. There's a whole bunch of them. They all did really well this week. And when you look at this intraday chart of Bitcoin, you see why. It broke up from a rising bottom and has had really good gains off of that low sideways trading pattern. So Bitcoin looking better, but still as a long-term hold, I would be fairly cautious. All right, so my ratings then, US stocks neutral on both time frames. That's an improvement. Canadian stocks long-term neutral, short-term bullish. When I say long-term, I mean the 3-year chart. Short-term, I mean the 30-day chart, the 1-month chart. Gold, bullish on both time frames. Oil, neutral on both time frames. US dollar, long-term neutral. We are at that trend line where it should bounce, but bearish in the short term as it has been moving lower. Bitcoin raised my rating to neutral long-term and bullish in the short term. And then interest rates, long-term neutral, short-term bearish. All right, well, that's now get into the day trade of the week. This is an example of a stock that we picked up on in my Stockscores Active Live, which we run every day on Stockscores.com. And it is an opportunity for my students, my subscribers, to watch my analysis screen running in real time, looking for stocks that are behaving abnormally, looking for different signals, all managed by a computer. Computer can do the work of 10,000 traders, and so most of the work is done by the computer, and then we have these signals that we watch for. And one of the critical things that I always look for are stocks that surprise us with abnormal activity. So the stock that you see on screen is NEGG, and it started slowly on Friday and then came alive a little later in the morning. And that's the point when we start to take an interest. So there's algorithms that are running that look for that buying pressure coming in. And then it's just a matter of places to jump on board. So we have what's called a hit and run strategy where we would buy here. We have an intraday pullback strategy where we would buy there or there. Another signal right here. So there's a number of opportunities using these dots and those dots represent what are called action candles and message candles. Those are my own proprietary indicators. I use them in this program called TradeStation, and that's what people can watch on Active Live. But the key thing that I want to emphasize on this trade this week is that you could have bought the stock multiple times and stick with the trade to play for the big win. And that goes against what I talked about at the top of the video, which is being a normal human being. Normal people take a small profit and then they sell. They're happy to say it, and they'll say, oh, you never go broke making a profit. It's actually not true. You have to make sure that your profits pay for your losses. And even if you're right only half of the time, or even less than half of the time, if you have really big winners and relatively small losers because of good risk management, you can still do really well in the market. Well, I hope that you've enjoyed this week's Market Minutes. Those of you that posted questions last week, I will be launching a video on Monday with the answers to those questions. At least some of them. There's quite a few questions, so we'll try to get through lots of those. But let me know what you think. Is the market going to break that downward trend line, or are we going to roll over and continue the bear market that we've been in through 2022? Love to hear your thoughts on that. If you enjoyed this week's video, click the like button. It always helps the viewers. And most importantly, trade well.